Last week, we focused on whether gold could hold above the 4,180 level or whether sellers will drag price back towards the major 4,000 support zone. Well, this week the market answered that question. Sellers pushed gold all the way back to the psychological $4,000 level, but here's what makes this interesting. Despite all that selling pressure, they couldn't force a decisive break below support. That brings us to the big question for this week. Are buyers beginning a meaningful recovery, or is this just another pause before sellers return? Let's start with the bigger picture. Looking at the daily time frame here, one thing stands out immediately. For almost 8 months now, the $4,000 psychological level has continued attracting buyers. We saw it happen in October last year, again in November, and then this year in March, and once again last week. This tells us buyers continue to see value around this area. Part of the reason is psychological. You see, large round numbers naturally attract attention, but it's also driven by market sentiment. Even with the expectations that the Federal Reserve may keep interest rate higher for longer, many investors still see gold as a long-term hedge against inflation and geopolitical uncertainty. That's why each time price action approaches this area, buyers continue stepping back into the market. For now, the $4,000 level becomes the key level to watch this week. As long as price remains above it, buyers still have something to fight for. A decisive break below it, however, could shift sentiment further in favor of sellers. Now, let's zoom into the 4 hours time frame. Now, when we scale down to the 4 hours time frame, we begin to understand why gold has been under pressure over the last 2 months. Over the last 2 months, price action has continued forming lower highs and lower lows, clearly highlighted by this descending trend line you see here on the chart. The answer lies in market sentiment. Over recent weeks, the market's attention gradually shifted away from geopolitical tensions and back towards the Federal Reserve. Inflation still remains above target. Fed officials continue signaling that interest rates may need to stay higher for longer. That, of course, has supported the US dollar and kept pressure on gold. Notice another important feature on the chart. The 4,400 level acted as support during the final week of May. However, after price broke below that level at the beginning of June, it immediately changed roles and has since acted as resistance. This is something you will often see in the markets. Once a major support breaks, it can later return as resistance, and that's exactly what happened here. At the same time, buyers continue defending the $4,000 support. That leaves gold trapped between two major levels. So here's the question. Will buyers defend the $4,000 and push price back towards the 4,400? Or will sellers finally break below support? Let's zoom in once more. Scaling down into the 1 hour time frame, this is where things become much more interesting. The 1 hour chart shows exactly how price evolved during the second half of last week. After several days of making lower highs and lower lows, sellers began losing momentum as price approached the $4,000 support. Instead of breaking lower, gold started moving sideways, as you can see here, creating a range between roughly $3,970 and the $4,040 area. Then something changed on Friday. Buyers finally made their move. Price broke above the range. What's interesting isn't just the breakout itself. The breakout also pushed price above the descending channel that had been guiding the market lower. When two important structures like this break at the same time, traders usually pay close attention because it can be the first sign that market sentiment is beginning to shift. Of course, one breakout doesn't confirm a new uptrend. The market may still return to test these broken structures before deciding its next direction. If buyers successfully defend them as support, the recovery could continue. However, if price falls below the breakout area and returns inside the descending channel, sellers may regain control and once again target the $4,000 support zone. Now, let's take a quick look at the short-term picture. For short-term traders, the 15-minute chart gives us the immediate picture. Price is now moving inside a small temporary ascending channel while consolidating between approximately $4,065 and $4,095. If buyers can break above this range, the recovery may continue into the early part of the week. However, if price breaks back below the ascending trend line, attention quickly returns to the 4,000 support area. Now, while the technical picture appears to be improving, the market may ultimately be waiting for one thing. Now, everything discussed so far leads us to one event: this week's non-farm payroll report. If you are only following one economic event this week, make it this one. You see, the NFP is one of the most closely watched reports each month because it gives us a snapshot of the strength of the US labor market. Since employment plays a major role in the Federal Reserve's decisions, it can have a significant impact on both the US dollar and gold. A stronger than expected report could increase expectations that interest rate remains higher for longer. That will likely strengthen the dollar and place renewed pressure on gold. A weaker report could do the opposite. It may reduce expectations for further tightening and give the buyers the confidence to build on last week's recovery. Also, remember that the US market will observe the Independence Day holiday at the end of the week, and with fewer market participants after Thursday's data, volatility could increase. So, heading into the new trading week, the story is quite straightforward. Long-term buyers continue defending the psychological $4,000 support zone. Short-term buyers have finally showed signs of recovery after breaking above the recent descending channel. But sellers haven't disappeared yet. They still have the broader 2-month downtrend on their side. Now, all eyes turn to next week's economic events, especially Thursday's NFP report. The charts have already shown us where the battle is. Now, the market is waiting for a reason to choose a side. Will the anticipation of the NFP provide buyers with the catalyst they need to build a strong recovery, or will it give sellers another reason to challenge the $4,000 support once again? Let's see how the week unfolds. Until then, trade safely, manage your risk, and I will see you again next week as we review how this story unfolds.